Good morning, everyone. Welcome to the Modern Market. This is our daily show from Monday to Friday at 7 a.m. Eastern Time, 12 p.m. GMT, every day of the week, where we discuss all things to do with the modern market. That is the crypto market, the NFT market, and how to ideally make some money on the internet. We are live on X. We are live on YouTube. I'm your host, B-Check. I'm joined by my legendary co-host, Legendary, and we're going to get into everything in just a moment about what has been going on in the NFT market, looking a little bit forward to some exciting new coins on the horizon. Coins are doing quite nicely at the moment, particularly these airdrops. I want to discuss that in just a little bit and more. But just a reminder, friends, as always, nothing that we say here is financial advice. This modern market is exceptionally risky. We do not know anything for sure. So please do proceed with caution and exercise your own judgment. With that out of the way, Legendary, how are you doing this Tuesday, the 30th of January?
GM, I think this is the week that I'm probably most excited for in January. Not because it's the last week, but there's so many things happening, so many things that I'm waiting for. And as you're saying, it is about the coin market. Coin market is looking pretty exciting this week. Quite a few things that we want to also dive in today's show. That's how I'm feeling excited about the week.
Yes, we said that we've got a lot of things to look forward to in terms of the coin market. Obviously, Jupiter is the title of the space. It's the title of the YouTube show. We're going to be thinking about Jupiter. One initial thought going straight off the bat, kind of straight into it, is that these coins have been doing very nicely when they come out. Like every single coin seems to be behaving exactly the same at the moment. They just do a little dip and then they rip up. Um, that's just like one first observation. Any thoughts on that, Legendary? Do you think we see a repeat of that potentially?
Really depends on the token. I mean, the Jupiter one is completely different from many of the other tokens we looked at, right? Especially what we've seen in the gaming market or in the gaming meta so far is tokens starting out with a very low initial market cap that start out also with a low FTV and just have loads of room to rip, really. However, with Jupiter, we are seeing something where the perp markets are pretty excited about, where we're already seeing a multi-billion-dollar FTV before the launch. We are seeing actually quite a lot of trading volume, something we're going to get into probably in more detail later on the perp markets as well. So Jupiter is probably like the super interesting one, how it will play out on Solana and where that liquidity will flow to. Whereas with the gaming tokens, we're still seeing the same rinse and repeat pattern of, as I said, low market cap, initial pump, and then also more and more FUD around certain projects. But on the coin side of things, we do see history repeating itself.
Yeah, before we get into news and before we get into the headlines, let's touch on that a little bit. We were speaking about that off air just a moment ago. Noticed a trend the last few days where, how do we put this? I think it would be fair to say gaming specific projects are appearing to be, certain gaming specific projects are turning out to be not entirely trustworthy and are disappointing when it comes to token allocations which have sort of been promised, or are disappointing with some type of output, whether that's a product that they launch or whether that's a token allocation. This happened. There's been a few examples of this. First, we reported on it yesterday in the snapshot. The Valhalla founder has been fudded aggressively on the timeline about this keyboard that they decided to launch. They said they'd taken in huge amounts of funds, not really been great on communication up to date, and have shipped this keyboard, which, by the way, holders were expected to pay for, I think at a price that's higher than the actual mint. Though you'd need to double check that. That is not ideal. So that's one example. Number two example, also in the snapshot from yesterday, which happened over the weekend, this Sky something game, I can't remember the exact game, had
IARC.
SkyArk had suggested that Binance Labs had participated in their latest round of funding, Binance Labs were forced to come out with a statement to say, no, we were not. Like, do not use our name in that way. We may have been involved in your incubation some time ago, but we were not involved in that. And 3 and 4 Legendary, you had a couple of examples from maybe the last 24 hours. Do you want to take those?
On the one hand, we've seen quite a lot of FUD around Farcana, and more recently also FUD around AFG, and both those projects really, or AFG is a token, AOF I should say rather. To me, what is really baffling is that it still goes all down to the same problem of communication. It is like fucking up communication, not being able to be clear on comms, to be respectful on comms, to have statements like, it's a free mint, we are delivering, like, what do you want? It's just that notion of judging something as a free mint is so stupid to me, to be completely blunt, because the price that really matters is the average price that something trades on at the secondary where most people got in. There's no point in looking at something as a free mint if the majority of your holders have paid whatever 0.6, 0.4, whatever the project is and whatever the price is for that. So this is why I don't really like that point of view. And with Farcana, we've seen a FUD around the game, but then we've also seen it was a free mint, right? It went up from 0 to 1.6-ish ETH, had stabilized at 1.2, 1.3 ETH, and now is down all the way to, last I checked at least, it was 0.4. And we've seen that the tokens that were supposed to go to NFT holders, at least according to a post by Skyline, are not really there anymore. There's a lot of or there's a lack of clarity of tokens for the investors, of airdrop winners who apparently, according to Skyline, didn't get tokens yet. So this is a bit weird, to say the least, in terms of communications. And with AFG, we have had the token launch today. The token, following that pattern, did pretty well. Is up 450% ish on Bybit right now. I think the initial announcement was that the key holders are supposed to unlock or to get their tokens airdropped shortly after TGE. Then there was an announcement in the Discord that got deleted pretty quickly that suggested a multi-month waiting period until you get your tokens. As of yet, there is no communication when that's going to happen. If you go on the website, you see a countdown that is currently at 116 or 113 days. So in that 3 to 4 month range. And again, it's a lack of communication that even led to the fact that you pointed out before the show, Bchek, that Dingaling sold all of his AOF keys, which were 143 founders keys, taking a 60 ETH loss. Zeneca commented that perfectly, because Dingaling is someone who typically doesn't dump projects, right? He's holding everything. Zeneca said, if Dingaling dumps your NFTs, you really fucked something up. And Dingaling's additional comment then also was update. Looks like they deleted the last announcement a couple of hours ago. Still no comms. So again, all the problems we're seeing right now in the gaming space, and not all of it, a significant majority of them, go just back to the very, very simple thing of not being able to, have a clear and straightforward communication with your community, which makes me sad after like all that amount of time in this space to see that we're like still, struggling with the basics, to put it like that.
So yeah, thank you for that summary. Very, very helpful to get a handle on what's going on. I'm kind of getting confused between all of them because they all seem to be doing equally shady stuff, frankly. But it's not just a question of communication, I think, because one of the reasons given for Dingaling's dump, this was explained by Atare in a post. This is in the snapshot as well. It appears to be that one of the main issues was with the allocation. So 1% of the supply was going to go to NFT holders with a 20-month vesting, which is a very long time. So 99% of the tokens would go to team, advisors, investors, liquidity pools, and only 1% would go to the NFT members with a 20-month vesting period. And I don't know whether we were talking about that one or whether we're talking about Farcana, where it seems to be they were pushing for like a 4-month cliff and then a vesting period on top of that. And so all of these, like, I don't know if you saw the clip that came out on the Modern Market account over the weekend, Legendary, but on Friday's show, we were talking about how NFTs were basically just becoming pre-sales, and explaining that, this NFT sale is kind of sitting in between some type of public sale for a coin, but after like pre-seed and seed round of funding. And the thing is, everyone else in that investment cycle knows these details in advance. They know what the cliff is, they know what the vesting is, and people are transparent. Like if you're a seed, like as when we are making these angel round investments, we ask those questions, obviously. And if people don't tell us, then that would be a red flag. But they do, because it's natural for people to ask those questions. They know they have to give that information. On this case, however, people are buying these NFTs knowing that there could be a vesting, um, there could be a cliff even, but we just have no idea what's going on. And this is one of the really uh, challenging things to assess when you're buying an NFT at the moment. If your end goal is the token, when you do not know the cliff, you do not know the vesting period. So, what's your kind of reaction to that?
It's a very, very fair point that you're raising. And if we're completely honest, then you also have the situation that there often is asymmetric information, in the sense of the public might buy the NFT and not have an idea about how the token structure will look like. But with all the KOL pre-sale rounds that are going on, that we've also seen for NFTs, sometimes those early investors, influencers, KOLs, whatever, have a bit more information also on the tokenomics of the NFT, which is obviously, creates a situation where someone has privileged information that others don't have, and that's really valuable information to have. And it also leads to a point where, like, if you buy a couple or some gaming NFTs on the public market, you're basically speculating on buying like a mystery raffle box for a token, where you don't really know what token will you get, when will you get it, what are the tokenomics looking like. It's like a mystery IGO raffle box, which is very degen, very fitting. And um, I think that doesn't not even include the problem that we haven't even touched on, which is just the fact that there's way too many games. We still don't have actually great games to play, et cetera, et cetera. We're just already in the early stage of pre-launching a game, seeing the
Yeah.
problem with the tokenomics. That's not even talking about the sustainability of a token once the game is out.
Yeah, exactly. That's a huge, huge, humongous problem. Seriously. And I think the tokenomics one shouldn't be that difficult to design some reasonable tokenomics, given that other people do so and don't get fudded in that particular way. So interesting stuff. Look, this is not even one of the headlines today. It's just a trend that we noticed, wanted to bring it up at the start. We want to get into the headlines in just a moment. We're going to bring you the headlines from the snapshot first. As always, if you want to follow along, these are in the snapshot, which is pinned up top. If you do find that it brings you some value today, please do give it a like. So let's get into it, starting with the price action. We've got Bitcoin up 3% at 43.4K. That's nice to see. We've got ETH up a couple of percent at 2.3, Solana up 7% at 104, Ape up a couple of percent at 1.4, NFT volume on ETH at 9.5 million, Solana at 8.6, Bitcoin at 7.3. Headlines today. Number one, highly anticipated Solana DEX token JUP hits $7 billion valuation pre-market. Want to talk extensively about this particular token today, and what we see with it, what its value prop is, and where we think it could go. Number two, Quantum Cat's postponed mint to Thursday after minting problems. Really struggled yesterday with the Quantum Cats mint. They've delayed for a few days. It's going to be, the details are in the snapshot if you want to double check that. Number three, over 3% of existing Bitcoins are currently backing spot ETF products. I know this kind of flew under the radar yesterday. I think that's incredibly important news, that the ETFs have already accumulated such a sizable Bitcoin position. I think that's very important. Getting into some top sales, we had a CryptoPunk selling at 60 ETH. We had a CryptoPunk selling for 52 ETH as well. That is almost 10 ETH beneath the floor. So if someone wants to make a quick flip there, that will be good for them. Getting into those floor prices, we've got CryptoPunks at 61.5 ETH, down a percent. Bored Apes at 24.9, Mutants at 4.3, DGods at 2.9, Captains at 4.5, Azuki at 6.9, Penguins up 7%, recovering a little bit from the big downturn over the weekend at 16.7, Moonbirds at 1.1, Noun's winning bid was at 7.9 ETH. Legendary, that is the price action. Those are the headlines. Any numbers standing out to you before we get into the headlines?
Apart from the market generally being on the upside again, it's once more Pudgy Penguins that keeping pressing me and keep defending that 17 to 18 ETH price point really, really strongly, which is not only very impressive to see. You put it perfectly yourself in a show. What was it, 1-2 weeks ago, when you said there's no project that can exist between the 10 to 20 ETH range.
Yeah,
and definitely Pudgies are defending the upside of it quite well.
indeed. They're there for the moment. It seemed for a little bit over the weekend like they wanted to tank entirely. I don't know if you saw, Legendary, we reported on this yesterday. Was it yesterday or was it Friday? I can't remember, but the lending market just went completely crazy. All the loans got pulled, all the 0% loans and Pudgies got pulled. So what that meant was that now all of the leverage in the Pudgies ecosystem is fairly sizable. So there's like loads and loads of loans between 30 to 50% interest rate but at the same time, a load of the 0% loans are now back. So this is just a farming game getting played behind the scenes, but a lot more leverage and a lot more interest attached to a lot of these Pudgies than there was before. Okay, let's get into the headline for today then, Legendary. Jupiter Exchange, the perps hit $0.7 on AVO pre-launch futures market. Just set it up for people in case people are completely under a rock at the moment. Why is Jupiter considered to be an important token? What is Jupiter? And also, what is this pre-futures market and can it be relied upon?
Yeah, absolutely. Jupiter, probably the most prominent DeFi platform on Solana, including swaps, DCA, so dollar cost averaging purchases, limit orders, bridging, perps, pooling, stable LST stable coins, and many other features. So quite the cool. DEX is launching the token tomorrow. It is highly anticipated because they went for a very interesting distribution model where basically they split the tokenomics, or they split the token distribution in half, if you want to put it like that, with 50% going to the community and
50, not
50%
one.
going to the team. So 5050. Initially, they had different tokenomics. That's quite interesting to see. Initially, they had 40% for the team and the strategic reserve, 40% for community growth, and 20 for lock token sale, which they got rid of. So that's very interesting to see that strong, or that very simple distribution, half for the team, half for the community, multiple rounds of airdrops. So tomorrow is only going to be the first airdrop. Also a certain allocation. I think it's 10% of the overall tokens for contributors and grants. And what we've seen is quite the sizable trading activity on the futures market. So basically, people speculating on tomorrow's token price, on tomorrow's token, on platforms like Helix and others. And I think ever since we've been reporting on the Jupiter perp price, it's been an uptrend. I think we were impressed at one point where it was like at 30-40 cents. Now it did hit a peak of 71 cents, putting the FTV, the fully diluted valuation of the JUP token, at $7 billion. And currently on Helix, it is trading at 63 cents in that very moment.
Excellent summary of what Jupiter is, why it's going to be so valuable. This pre-market pre-futures market, can it be relied upon? Like if it's saying that it's going to be 7 bill, is that where, in terms of FDV, is that where we expect it to come out? What's your experience with that? What do you think?
I think it's a pretty reliable instrument once we get to a certain size of volume. I mean, alone on Helix, currently looking it up, we've seen 260K trading volume over the last 24 hours. I would expect that some of the other perp markets did way more than that in volume. So it's not some kind of meme coin that 3 people are trading on a perp market to pump up a price artificially. We are seeing a very, very broad interest, and we're seeing a very strong uptrend on the perp market for JUP over the last couple of weeks. That doesn't mean that the price tomorrow will exactly be 70 cents or will hold there. Obviously, it could be oversold. It could be even in even higher demand and go higher than that. But I do think it is a good mark where you can set your expectations for where that price might range tomorrow. But it's not set in stone that it's going to open trading at 70 cents.
Okay. There's some good stuff. I've got some tweets on this, trying to look forward. Tira, I see with your hand raised, we've just got a few things to do. Then we're going to come to you just after. I want to use some of these tweets as points of discussion. We've got a tweet from Mert. It's up for the people on YouTube. Just going to read it out for those listening in to get a sense of what could happen when that Jupiter stimulus is coming in, right? Because people trying to think, well, where's that money flow? Does it even flow anywhere? Someone asked me yesterday where I think it goes, and I think people are going to hold this actually, at least for a period of time. This is what Mert had to say, his prominent tweeter on Solana. Number 1, Jupiter airdrop distributes wealth and brings back new liquidity. Number 2, new liquidity drives other KPIs for other protocols, NFTs and DeFi. Number 3, protocols with booming KPIs release tokens. Number 4, rinse and repeat until breakpoint. Number 5, wealth generation and hackathon ecosystem attracts new talent. Number 6, VCs who missed out on Sol fund the new talent because Sol itself is doing so well, especially after breakpoint. Number 7, VCs who got massive returns from early Sol teams also fund new talent. Number 8, new Jupiter caliber teams are born. Number 9, probability of top tier products being on Solana is maximized. Number 10, P equals MV. I don't know. What does that stand for? Profit equals maximum value.
Are you making that up?
Yeah, I just made that up. Is that what P equals MV stands for?
No, isn't it the formula for momentum? Like its momentum is mass multiplied with velocity.
Momentum.
Yeah.
Okay. Yep. Let's go with that. Kind of the final, less important point, but the overall thesis here presented is an interesting one, right? Do you think that this flywheel is being created for essentially all things Solana? That's what if I had to synthesize these 10 points, what they're describing is some type of flywheel being created for Solana as Jupiter hits the ecosystem. All that liquidity goes into other things on Solana. All of those protocols then attract more TVL. They also release tokens too. That continues to create more wealth, and that just keeps going in a cycle, at least for a period of time, which attracts more funding because all of these tokens keep doing well and there's all this TVL sloshing around. What do you think of that idea in principle?
Yeah, first of all, I did look it up. My physics memory served me correctly. It is momentum as mass multiplied by velocity.
Nice.
I do think it is a very logical train of thought. I also like the addition by Mert in the first comment to their own post that says the masochistic Nassim Taleb voice in my head, colossal black swan that wipes out the entire industry because we celebrate it too hard. Like definitely like that aspect as well, but it's something that we've seen from other airdrops, whether there was the first Blur airdrop, whether it was Uniswap. That obviously big liquidity events like that are just catalysts to drive more momentum on other protocols. in terms of people expecting to farm out the airdrops, but also like using that liquidity, putting it to work, purchasing stuff with it. I think we'll see similar things with Magic Eden's NFT token, with TensorTrade releasing their token for the NFT ecosystems. So there's going to be quite a lot of those big momentum pushes or catalysts in the Solana ecosystem.
God, yeah. It's just not even just Jupiter, is it? Like Tensor's going to be huge, MarginFi, Magic Eden, Lord above. Okay. gotta brace ourselves here and kind of appreciate the scale of what could potentially happen if these things play out as they probably should, right? Like Tensor just will be a huge drop. I don't think we necessarily need to debate that. It's a great product. It's doing a great thing. It's really shipped really, really well for the NFTs on them. Magic Eden also is a Titan. So it's not just Jupiter. I think that's a good first point. My 2 points on this is when I was asked, like, what happens? Like, where does this liquidity go? Obviously, that's what people are trying to ask. I think 2 things, and it doesn't necessarily give people a perfect answer, but these are the 2 things. Number 1, I don't think it leaves Solana. I think that lines up with what Mert is suggesting in this tweet. I think that probably lines up with what you're saying. I don't think people make money on Solana and then think, right, I've really wanted that Chromie squiggle for ages. I'm going to go and buy the Chromie squiggle. Maybe 1 or 2 people do that, but I just don't think that's where Solana liquidity will go. And remember, the people who are rewarded by this JUP airdrop will be the people who are trading on Solana all during the bear market. So look, I've come over now much later, although I was using Jupiter a little bit before. But in that bear market period of time, I'd left. I was one of the people that thought FTX has screwed this whole thing. I didn't think it was going to go to 0, but I had definitely just shifted my attention away. But the core hard users of Jupiter all through that period of time will be people who are clearly core hard users of Solana, because they're the ones, and they'll be the ones who get rewarded most. So I think their loyalty and dollars will stay on Solana. That's the first thing. The second thing is that I think I don't even think this liquidity leaves the Jupiter token for a little bit. I've got a feeling that we dip a little bit, maybe at the start, as with all airdrops, when people want to see some profits. But I've got a feeling that like this token itself will just be one that people want to hold. And I don't know if this is like a correct thesis, but I think there's something to do with this meme coin launchpad thing that the founder of Jupiter has been talking about. I don't know if there'll be a connection to that if you hold Jupiter at the same time, but I think something to do with that will be relevant to the token. And there's absolutely no details on that. There's no details of that connection, but I think the fact that they're doing this meme coin launchpad where they go, the idea, and the founder has spoken about this, that they believe in lots and lots of different types of monies. There's no scarcity of money. Just going to keep cranking out new ones, keep experimenting. When was obviously the first one a few days ago. They want to keep pushing tokens out. I've got to think if that's happening on Jupiter, then that's going to be like that is a value add to Jupiter, which has not even been considered yet. It's already like one of the best DEXs, if not the best. It's already got great products. It's already got DCAs. It's already got perps. And then it's just got some meme coin launchpad on top of it. That's pretty huge. Legendary, what do you think?
I think that the launchpad strategy by them with the WEN token was so smart, and Meow, the founder of Jupiter, did outline that in one of their tweets perfectly, where they said, testing our new launch platform. The launch platform we are testing is one that we wish we have. We are builders first and foremost. So yes, even the JUP launch is a testing ground for a new launch platform. And then outlining that, well, they had the test token launch, and then they had the real meme coin, which obviously had happened already by now. And just the thing that they are not only like distributing a token, but thinking about how they can build their own launchpad which others might be able to use, and they will probably create incentives for that. And also the fact that we are seeing multiple rounds of airdrop is multiple rounds of airdrops is, in my opinion, highly indicative of the fact that there will be an incentive structure to keep using the platform, to keep using and keeping those tokens. And I think that there will be obviously incentivized liquidity providing, as we've seen with the what was it, Jito airdrop, where Camino Finance and others had massive incentives to stake there, or to stake that, to provide liquidity there. So I do think that Jupiter will follow a similar playbook in a successful way.
Interesting stuff. I've got two more tweets that I want to show you, which I thought were interesting. The first is by OSF, where he tweeted, after JUP drops, you're going to see JUP2 Exchange start printing over $1 billion in volumes on multiple days, in his opinion. One thing which is very important to note is that there are 4 community allocations for airdrops. So this is just the first of 4. So the whole point, I guess the thinking here is that it's going to do really, really well. And then people are going to want to farm it on an ongoing basis for however long necessary. And that means it's going to just really, really print in the short and medium term, at least. Legendary, any thoughts on that?
I think OSF has a fair point with that. I think OSF also has a fair point with the additional comment of saying that Jupiter, in his opinion, might surpass the $10 billion mark in terms of FTV, but also that FTV is really just a meme. It's not a number that says a lot. It's a number that we like to look at, not as in we, as in the two of us, but we as the Web3 space overall, because it's just a nice large number and we like big numbers, but it doesn't hold a lot of weight. And as you said, and as I said, I think the crucial part is that it's just the first of 4 airdrops, and we've seen that with optimism, that many people have kind of faded optimism after the first airdrop, and then there were more, and we kind of learned that. So we've seen it then with Blur play out differently, where people faded the first season but farmed the fuck out of the second and third season. And I think now we are in a mindset to understand that multiple rounds of airdrops means finding good strategies to participate and farm them. And I definitely think that there will be high interest and high volume because of the airdrop and because of everything that Jupiter is building in the lead up to the next airdrop rounds. Yeah.
It's funny you say FTV is a meme, because then I was just wondering, I mean, I know we know that, and therefore market cap becomes more important. But then maybe market cap has because FTV is a meme and because circulating supply is typically so low, then market cap also becomes a meme, right? Because market cap goes so much higher than what it could be, which as a consequence pushes the FTV into a meme. So there's not a world where FTV isn't a meme. Sorry, FTV is a meme and market cap is also not a meme. Or do you think there is a world where market cap is a better number to look at? Because in my thinking about this live, like they both just go, as soon as one goes out of the window, the other one does as well.
I still think that market cap is a more realistic number to look at because it nicely compares to the valuation of a company that's publicly traded. You take stock price, you take the amount of stocks, multiply that, and you have the company's value, or company's market cap at least. And I do think that essentially if you have a market cap or a circulating supply that's 10% of all the tokens, and that's say 100 million tokens at, I don't know, $5, and that 500 mil market cap, it is a number that you can at least use compared to other protocols. But of course, you can't look at it only in isolation because it's something we've been talking about on the show for quite a while. You have to look at unlock schedules, you have to look at vesting cliffs, who else is having tokens, when will they be distributed, and how will that impact the circulating supply.
Okay, Matthew in the comments said market cap is meaningless in Web3. Laughing face. I was kind of with you before, Legendary, where we know FTV is a meme. Definitely look at market cap with a bigger magnifying glass. but I'm starting to wonder whether even that is just wildly deceptive sometimes.
It can be widely deceptive. I do agree with that, but I do still think that it's the better proxy
Sure.
in terms of if you want to pick a number to compare to other things, then it would be comparing market cap to market cap, and price in isolation, circulating supply in isolation, FTV in isolation make even less sense. So if anything, then I would look at market cap if I wanted to compare tokens.
Sure. I've got one more of these, and I see Gary with their hand raised. Want to go to him in just a second, and I know some others wanted to contribute if they have anything to come in. This will be the moment after this tweet. Okay, this was an interesting one, thinking about the trajectory versus Ethereum. And the first thing I'd say just before this is, I don't know, people are definitely treating this as if it's like some seminal moment for Solana. It's like Jupiter's about to drop, everything's about to change. Like, I don't know, I just get that sense of reading all of these assessments and evaluations, and they just think that this is like some big turning point where Solana really comes to the party. And Santiago, who is I believe, a very prominent investor, says Solana is going through what Ethereum did during the ICO boom, but unlike back then where it was only white papers, here Solana has applications seeing meaningful usage and growth. Among the many reasons, I believe that Solana will converge on Ethereum faster than most believe. Legendary, what do you think about that?
I do think that it is a seminal moment for Solana. I do think that airdrops have changed or have had a massive impact on ETH, because we have the co-founder of Rarible. We have Alex Solnikov with us in the audience listening in. I remember back in the day when Rari introduced their token and everyone was minting NFTs, farming the airdrop, increasing the trading volume. That was back in, don't want to say the wrong year, was it 2020? I think it was super early. And at that point we weren't like really familiar with Alex is agreeing it was 2020, familiar with how airdrops work. We weren't really familiar with how Uniswap will work, what impact it will have. It got out, a lot of people got it, and was like that forced reaction after the sushi airdrop. But now we've seen over the last 2 years how the ecosystem has evolved with really using airdrops as a way to drive user acquisition and also try to drive user retention, and obviously a more mature ecosystem with many, many more things to do. And Solana has never really been on that strong side of airdrops until now. Yes, we've seen the G2 airdrop, and G2 was massive. There's no doubt about that. But the number of people who could claim G2 was super low. Whereas with JUP, I think the minimum points amount is 200 JUP that everyone who used the platform at least once would have received. So it's like a very, very broad stimulus that definitely gets more attention than that isolated G2 airdrop that, again, albeit it was high in value, it only got to very few, to a very limited number of people. And I think that this could be a kickstart for an airdrop season on Solana. And obviously there's now much more airdrop farming going on Solana with Camino, with other liquid staking protocols. And I also agree with the aspect that we obviously Solana is very mature in terms of the applications, because the whole crypto space has matured up to now. And we've talked about the token extensions on Solana last week that basically make tokens smarter, quote unquote, equip them with smart contract like capabilities without needing to code or have your own smart contract. So that's a completely different playing field. And I think that for all those reasons, the airdrop season on Solana will be a very, very intense one, and definitely impact the future of the ecosystem, future of the blockchain in the mid to long term.
Yeah, I think it's going to be glorious, frankly. I completely agree with the statement, which is that Solana has applications seeing meaningful usage and growth. One day I toggled Coin Market Cap to make it so that it was only showing me Solana protocols, and there's just not enough of them that have released tokens yet. So there's like, I know that there will be a huge variety, but there's just not enough that are actually tokenized just yet. especially considering that there's so much good stuff going on Solana. So I agree with it in that respect. The second question, which I don't know if you touched perfectly, which I think is worth giving some time to, then we're going to go to Gary and Matthew, who have their hands raised. Does that mean, does what we are speaking about mean that Solana will converge on Ethereum faster than most believe? We've spoken a little bit on the show about how every other chain gets to speed run what Ethereum has done, because, you know, the NFT market, for example, just came up on Ethereum in the last few years, started on OpenSea, went to Blur. NFT lending has then developed with NFTFi, Gondi, Arcade. So once that all kind of happened, there was like a template which people were able to speed run on Solana, and now that's that ecosystem. That same stuff's happening on Bitcoin. Does the fact that this stuff's been developed on Ethereum mean that Solana can speed run this stuff, and therefore it will converge on Ethereum, in Santiago's words, faster than most believe?
That's a very good question. I definitely think we see that speed run happening. I think we've seen it with layer 2 solutions as well, in terms of we had DeFi Summer on mainnet, and we had Polygon really taking off back then as a Plasma sidechain, not an L2, and having their own DeFi Summer. So we've seen narratives repeating themselves because people were more educated in terms of what had happened and expected similar things to also happen on other chains or in other ecosystems. And that certainly holds true for Solana as well. So yes, I do think there will be a speed run of what we've seen being built and being done and executed on ETH and L2s. I think we're already seeing it not only with JUP, but we are seeing it with Magic Eden versus Tensor, if you want to put it like that. Tensor being, I don't want to say it's the Blur of Solana, because they have a completely different attitude when it comes to royalties. But from the standpoint of like vampire attacking the users, etc., it's definitely let's put it like that. OpenSea had way more time in isolation to act on ETH and have like a significant market share there, versus Magic Eden being attacked left and right and having that token competition way faster in their cycle than was the case with ETH and OpenSea back in 2020, 2019.
Interesting stuff. Very, very interesting stuff. Let's keep the conversation moving. Gary and Matthew have their hands raised. Gary, welcome to the stage with us. Nice to see you again with us. What are your thoughts on Jupiter and the potential airdrop season that could be kicked off on Solana as a consequence?
Yeah, GM, great conversation. I've taken a couple notes. So the Launchpad thought, that's proving out. Jupiter kept 1% of the WIN tokens. So that's 10 billion based on the 1 trillion supply. 0.75% of those will be distributed back to the DAO that's being formed as part of the Jupiter airdrop. So JUP will be its own DAO. They will receive 1% of Launchpad tokens, according to what's been said so far. And that happened on WIN. So that's a nice distribution. That's about, I don't know, what is that, 7.5 billion tokens that'll go back to the DAO as their first thing. He's also said that if you're part of the DAO, Jupiter goes through the same launch process, and 1% of the Jupiter tokens get released to the DAO as well. So that's going to fund that. Second thing is, this token drops at a 4 billion fully diluted market cap. It launches at 0.4 and it goes to 0.7 through the initial curve. So we're going to go from a 4 billion to a 7 billion fully diluted market cap with 17% circulating supply in the first year. That 4 billion to 7 billion, we're going to go through that, I would anticipate, pretty quickly. They ran through the curve of WIN very quickly. So I think we're going to push through that fast. Couple other points real quick. He said the JUP utility is value, so he's not providing utility for the JUP token. He thinks the utility of the token is the value of the token, and that should be the utility. So he's not trying to stretch in and figure out how you're going to use JUP other than the fact that it has value. And then the last point, if we look at WIN was a claim allocation of the last 6 months activity on Jupiter. This claim you had to be active before November 2nd, I think was the right date. which means with Win, they only got about 60% of the people who claimed. So there may be less than 50% of people who are eligible to claim JUP that actually claim. What he said so far is the unclaimed tokens will go to cold storage and sit there for a later date. He doesn't like burned for that because it's a permanent and he can't undo that. So that's an interesting dynamic that not a lot of people are talking about. We might only end up with about 500 million of these getting claimed, not 1 billion.
Very, very interesting dynamics. And thank you so much for that additional information and context about the DAO. I think, yeah, there's some kind of connection with the launch pad, which I think will be interesting to watch and just make sure we're on top of. So thank you so much for that, Gary. Really, really helpful. Matthew, we're going to come to you in just a moment. We've got 10 minutes left. I want to get people up to speed with what else has been going on in the space from the snapshot in the Web3 news. And then we're going to come to you to continue this conversation. So as always, this is from the snapshot, which is pinned up top. Number one, Quantum Mice rip 10x on Solana after a 0.042 mint on Sol. So they were about 0.4 Sol. Number two, Dimension redistributes unclaimed airdrops to those who did claim. There was a big increase for claimers, which is very, very good. Number three, Magic Eden wallet goes live with extra benefits for users, including boosted allow list odds and point multipliers. You can see some of the details there in the snapshot. Number four, NFT World Dingaling, we mentioned this earlier, just dumped 143 AOF First Founders keys, taking a 60 ETH loss. This was in response to being very upset with the allocation that was for the community. Next, Lazy Lions NFT project confirms new leaders have taken over. People were quite excited about that on the timeline yesterday. Next, Sotheby's Starry Night auction concludes today. The top bid is an X copy at the moment at $110,000. And finally, Solana NFT market Tensor reaches 100,000 Sol TVL with its price lock feature, which I still really, really need to test out because I want to get into that. That is the roundup from what else is going on in the space. Remember, this goes out every single day. You can use it to keep up to date with what's going on in the NFT market. Matthew, your hand is raised. Let's get back to the Jupiter conversation. What are your thoughts on Jupiter and where it might go?
Well, I appreciate all the points that have been made, and I'm actually really excited about this as a drop. I think that the platform is phenomenal. I'm really excited to see like what happens. I just wanted to come in for a moment to talk about my comment, which was about market capitalization.
Yes.
And I just want people, and this is maybe an unpopular opinion, but market capitalization is probably, unfortunately, the worst metric that we can use as a community to determine value of a project. The only reason that market cap really exists is so that CoinMarketCap can have a ranking system. That's the only reason that we really use market caps, is to rank tokens and projects. And when we think about the actual derivation of market capitalization as a stock in reference to the number of stocks in a particular organization, my point is really that in isolation, this alone is not enough to value a company, especially when we consider the fact that market cap is used at the value of a purchase. If a company goes bankrupt, somebody can go buy it. This is what shareholders receive. Like, we're using this completely out of context from a traditional finance perspective, and we're pigeonholing it as a value metric in Web3. And I just want us to be concerted investors in this sense, to say, let's look at other ways and other ratios and other metrics and other KPIs that projects have and that founders can use to really understand what the value of a company or a project is. So I just urge us to be cautious about it. And I say it tongue in cheek, like it's completely useless. It's a good way to rank things together and compare them together from value. But if we all kind of have this ethos of the valuation of these companies being a little bit frothy to begin with, I just think that we need to not look at them in isolation.
I think that's a very fair point. It's certainly the case that in order to try to make sense of any valuations in this space, the starting point has to be throw everything that you've learned out of the window. Nothing makes sense here. That's like literally the starting point, and only then can you try to make sense of it. One follow-up question though, Matthew, before we go to Tiro, is if it can't be FDV, if it can't be market cap, what do you think would be a helpful metric to determine something like Jupiter's value when it comes out?
That's a great question, because that's the next sort of logical step for this. And it would be amazing. It would be amazing if many of these projects had revenue, had business models, had ways. This is crazy, right? So, and I know that sounds like, again, tongue in cheek, that this is kind of a different space and that we don't necessarily rely on those factors in the space, but that would be something ideal. Metrics about their performance, the costs that it costs. What does it cost to get a user? What does it cost to manage the platform? How much money comes in? How much money goes out? Like, those are all things that are determination of a value of a company. So all I'm saying is that right now we have a simple divisor that is the number of tokens and the value we place on those tokens. And if the number we place on those, if the value we place on those tokens is all random or based on pump and dumps or based on hype, then you're never actually getting a true value of what we're looking at. So those are the metrics I would love to see. I know we're far from getting there, but I just want us to kind of like humorously and enjoy the fact that we're in this space. It's different than traditional finance, and that's okay. But we just need to be educated about the fact that there is a difference, and we need to be concerned that we're just looking at value in two different ways.
For sure. I had a thought there. I think something like this is what's happening. I think all of those things will exist because somewhere someone owns Jupiter, and like that entity will exist in some formal way. And actually, no, I don't think that is the case. I was going to say that they would need to report on those things to their kind of equity holders. But I think increasingly in this space, we're just moving to a model where investors themselves are not interested in traditional shares. Like, they don't want the shares in the real company. They don't want to, make sure that that have a slice of your revenue or your profit moving forward. They want the tokens because the tokens are proving over and over again to be the best path, the best possible liquidity event. In the end, that's all investors want, right? Like, they just want their return on their investment. And as things stand, the token generation event and whatever terms they got their tokens under, like, that is the best path to liquidity at the moment. And we appreciate it doesn't make it much sense, but we're trying to make sense of it because it keeps happening over and over again. So very, very interesting conversation. Appreciate that, Matthew. Tiro, welcome to the stage again with us, my friend. What are your thoughts on Jupiter? Where do you see it going?
Hey, good morning, God. Legendary B-Check. Thank you for having the spaces. Thank you for all the time you put into the snapshot and the information that's provided. It's something I wake up on the East Coast of America in Cleveland, Ohio, every single morning looking forward to. So I just want to give you props for that before my take on Jupiter. Jupiter, I wish I interacted more with it. I've really only interacted with it one time before I got into Soul NFTs, which was about 4 weeks ago, about a month ago. So I'm going to be in serious cope mode when all the Jupiter, the first of 4 airdrops gets launched. And I feel like I'm going to be playing catch up to all these big wallets they're going to be throwing around. A lot of liquidity and little old T-Row on ETH for the last 2.5, 3 years. Not going to get that. And of course, I didn't participate in the Blast token airdrop, which will be the big one this year for ETH as well. But I'm 100% a Tensor bro. I did get a Magic Eden wallet link. I got to see if it works and try to get into that. So I'm looking forward to see how that works. I think that'll perk it up. But just those rewards, I have 100% loyalty to Tensor right now. Their leaderboard is kind of weird. I don't really like the setup of it. It says I'm like 1,700 of whatever for Q3 or for Chapter 3 or whatever they're calling it at Tensor. But looking forward to that liquidity and also the Magic Eden liquidity. There's a lot to look at Sol to figure out where this liquidity is going to go once it hits, wallets. But I think I would say 25 to 33% of that Jupiter airdrop, I believe, will go back at least into ETH. OG products, which are more stable. But there's also going to be degens, and you need to do your research here. Look at projects within Sol that are OG, where the money's been spent the last 2.5 years, and look at those very closely to correlate and find those big risers where, big people with larger airdrops are going to drop that Sol and make that project go. I see Solana spring and summer being hotter than the Hades asshole.
I was waiting. I was wondering where that metaphor was going to go. I like it. I like the simile.
Yeah, you didn't see it. Yeah, I
didn't see it, but now I see it. Now I see it for sure.
Yeah. Hades asshole is an inferno chocolate starfish inferno. If you could say that. So I'll shut up now. I'll let other people have takes. I'm going to jump over to Coffee with Captain. That's my community DJ network. I appreciate everything you guys do here.
Thanks,
and I'll talk to you guys tomorrow.
Thank you very much, mate. Have a good one. Interesting stuff. I do think, as I said, I do think this liquidity stays on Solana ultimately. Would love to hear from Alex Salnikov. We've got Alex with us on stage, co-founder of Rarible. Legendary mentioned earlier on in the discussion, Alex, that you've been through a token launch yourself with Rari. You've also been involved with the governance with the Rari Foundation. Do you have any particular thoughts on the Jupiter drop, which is what we're talking about, and how they are going about, launching this token? And what are your kind of key learnings from when you went through this process?
Hello, everyone. Do you hear me all right?
Yes, we can.
Nice. All right. I was actually wanted to chime in on the previous point about the determining the value of the token.
Yeah,
so
somebody
mentioned the revenue, and I do believe that the projects do have revenue, and that is pretty fundamental to the value of their tokens. So I'm not familiar with the Jupiter per se, but for Tensor, you can get the full revenue breakdown just on chain, getting their exchange and fees. And I guess that's the whole point of the gentleman Matthew. I think you mentioned that the cost of the acquisition for the protocol is actually how much of the money you spend on the airdrop, and then you get the network effect and you get the revenue. So there is a bunch of fundamentals that you can get in the space. And for us, it was exactly the same. There was a bunch of money spent on airdrop. We've got the network effect. We've got the great exposure to the Ethereum market. At some point, the 60% of Ethereum NFT volume was happening on Rarible. We were focused on art, and art was the main NFT category. Then when the market shifted to PFPs, it went to OpenSea and eventually to Blur. I think the same is happening right now with Magic Eden and Tensor, when people do really want to trade, and just the trading interface is better than the general purpose marketplace interface for that. So yes, I do believe in tokens. I think they are great. We're almost there, and we arguably even in a better space than before with the stocks, because we can have all those metrics on chain in a transparent way. You can really fake them. So yeah, just my 2 cents. And I'm waiting for the Jupiter airdrop. I know I'm getting just a couple hundred coins because I wasn't super active, but my wife also is farming. I taught her a bit about that. That was fun.
Love it. That's excellent. Definitely got to get the partners involved. There's too many protocols to keep on top of alone. So good to partner up in that respect. One follow-up question, Alex. We're coming towards the end of the show. We usually just run until on the hour, but we've got one follow-up question, and then we'll bring it to the close. What was your, if you had one key learning from bringing a token on chain and getting it out there into the universe, with Rari, what was the key learning for you that maybe you would think, oh, that worked really, really well, or maybe we would do something differently if we could do it again?
The token worked really, really well for us. We were incentivizing the volume, which is not optimal. So some people could do the self-trade, the wash trading.
Got it.
And we were fighting with it just relentlessly. Incentivizing liquidity is better than incentivizing volume. So if you incentivize listings and bids and that kind of stuff is better. And I think the second learning would be to turn on the value capture faster. We were stuck too long in just inflationary mode when we were rewarding people, but not capturing that value back to the token. And that was going for a couple of years. It should have been much shorter. The Rare Foundation is actually why it was all created, and that's going great now, but it needed to be created right away.
Very interesting. Love to hear your thoughts on that. Super interesting to have people provide their insight, especially when they're so experienced. So thank you so much for joining us, Alex. As I said, we have run over time. But remember, guys, if you're new here, we run this show every single day at 7 a.m. Eastern Time, 12 p.m. GMT. We go for 1 hour. We discuss all things to do with the NFT market, that is the crypto market, the NFT market, and ideally how to make some money on the internet. Please do follow the Modern Market account on X, subscribe on YouTube, and subscribe or follow Legendary and Bcheck on who are co-hosting this show as we speak. Have a wonderful day, guys. Take care. We will see you tomorrow. Bye bye.